I'm revealing my secret liquidity level that changed everything for me as a trader to only trade high probability liquidity sweeps or turtle soup. It's not the previous day higher low or the previous session higher low. It's a level that I discovered after years of trial and error. In this video, I'll reveal this level to you and show you how to use it to trade high probability liquidity sweeps. If anyone needs one-on-one mentorship, check out the description. This is Molham and let's get into this video. Now in this video, what I'll be going over is simply why this level of liquidity, for example, was a high probability, why this one was a high probability liquidity sweeps, why this one was a high probability liquidity sweeps, while this one is not a high probability liquidity sweeps, and this one is not a high probability. So I'll be, guiding you to differentiate between the high probability one and the lower probability one, regardless of the bias. So we're not going to be focusing on the bias today, but the bias plays a big role in this. Now, if you look for liquidity sweep and the bias is going lower, so if the order flow is going lower, there'll be high probability liquidity sweeps that are sweeping the highs. In this case, price is going lower, sweeping the highs would be a high probability one. But today we're not going to be focusing on this. We're going to be focusing more on specific levels regardless of the bias, and show you why this one worked while this one not working. Now, in my last video talking about the my best 3 setups of the 2022 mentorship model, my last setup, and it's my favorite one, was the inducement one. Now, what was it? Simply what I was looking for is price to go up, sweep a liquidity, and it could be going lower too, but this is a sell model. Price taking liquidity, coming lower with a change of character, and let's say we have a fair value gap here, right? We have this type of fair value gap. What I want to see is not price just coming into the fair value gap and not be selling. No, I want price to either come below the fair value gap or inside of the fair value gap, and that's what I prefer more. Slightly inside the fair value gap, coming lower, and then another sweep of the high that was created inside of the fair value gap, and then the real move will come. Now we could have one touch here, or it could be twice. This is another, which is the 3 drive pattern. So sometimes price will touch the point of interest once, twice, and maybe the 3rd time, and then it's going to come lower. But sometimes it happens in 2 touches. Now, this is simply our liquidity level. So, you could see it from here. Simply, what we're going to be looking for is not any high or low, those highs or lows, not any high or low, but only highs and lows that are created in a fair value gap. Or it could be in a order block if you want. But mainly what I do focus on, and my highest probability one, is a high or low that is created in a fair value gap, or it could also be below or above a fair value gap. But if we have a big fair value gap, then if there is a high or low inside of it, that's going to be a high probability one. Now looking at the chart, this is a 4-hour EURUSD. This is today's date. Now it's the January 24th, right? Looking at this chart, if we're starting from here, for example, if you're just looking for any high or low, this is a low that's taken, and okay, this is a liquidity sweep, but it's not that sniper entry. Price went lower and you might be stopped out. If you go to the lower time frame, for example, to the 15 minutes, you might be stopped one time here. But if we are looking for example, starting from here on this price action, price is coming lower. Now we know that the order flow or the bias is going lower. Price started to go up. Now we have this fair value gap. Did we have a high inside of this fair value gap? There is nothing. Though we have this high below the fair value gap, this could also be used as a liquidity level, and this one is a high probability liquidity level. So this one is a high probability liquidity level. Now, if we keep going, right, what happened here is price coming into the fair value gap and coming lower. Now, I do prefer highs or lows that are created below the 50% of the fair value gap. So 50% of the fair value gap is somewhere in here, and that's where price actually reacted from. So next time, this would be a lower probability one for me. If there is a high or low that is created above or below the 50% of the fair value gap, that's going to be a higher probability one. This one, it's not the highest probability one. It worked here with a high below the fair value gap, and now we have a high inside of the fair value gap, right? This is a high inside of the fair value gap. We can actually be using this one, especially that we have a failure swings here. So we have this low and this low. Failure swings, low resistance liquidity. So we're going to be having a low resistance liquidity run, which means that when price sweeps this high, price will immediately come lower into those liquidity levels. So it's going to be more in a displacement way, right? Now, this is now a high in a fair value gap. This is a high probability liquidity level. If you just focus on those specific levels, you're only going to be catching, not every time, as you know, but a lot of time you'd be only catching what? High probability turtle soups. That's where a lot of people would be talking about, turtle soups, or this is the secret to be catching sniper entries. But it's that simple. Just focusing on highs or lows in a fair value gap. Now, this is a high in a fair value gap, right? This is the one that we have now. That is fresh. You see how the reaction happened from here? Just a sniper entry from here coming lower. Now, unfortunately, price did not go all the way to the low resistance liquidity, but we had another sweep. Now, again, this fair value gap, is it fully filled? No. Since this fair value gap is not fully filled, this could also be used as a liquidity level or inducement inside of a fair value gap. Now, not fully filled, there is also a potential of price sweeping again. And you see how we had another high probability liquidity sweeps. Now, is the fair value gap fully filled? Yes. Now, we're not really looking for this high to be taken as a high probability liquidity. Now, you see after this last sweep, you see one drive, second, third, and then the real move started here. So we have the 3 drive pattern here. Now price went all the way with the displacement all the way to the the low resistance liquidity. Now going back in time, let's look for any high or low in a fair value gap. We're not going to be looking for random ones like, oh, this one or this one. You see this one did not work. This one kind of worked. Why? Because this is a high in an order block, right? We have this order block here. I mean a low in an order block. Now we keep going. Also an order block here where there is, an order block is a fair value gap on the lower time frame. So this could be a sweep of the low in a fair value gap on the lower time frame. Now looking at this, in this case, what we're having here is a big move to the lower side. So we know that we're going lower. What happened is we created a fair value gap, a bearish one. This is a 4-hour bearish fair value gap. So we created this bearish fair value gap, right? Now, do we have a liquidity level or a high below the fair value gap? Yes. This is the first one. We did not go all the way into the fair value gap, and we have a low below it. Therefore, this could be used as a high probability liquidity level for a turtle soup. And you see what happened? We extend this to the right, the fair value gap. We can see that price came to this level, into the fair value gap, and started going lower. To where? To this low. And there you go. That's a very nice, and we're going to be looking at this low later, okay? But this is the first sweep. Now, what is this now? This is, again, a high in a fair value gap. If we, adjust the fair value gap to the unfilled part, it's going to be something like this. This is the unfilled part of the fair value gap. The fair value gap is still not fully filled. So there is always a potential of a liquidity sweep. What happened after? High probability liquidity sweep here. And this one was not a sniper one, like, price a little bit went inside of the, or deep inside the fair value gap. And you see after that, price went all the way here to the order block and reacted from here. Now you should be balancing out between targeting the highs or lows or the order blocks or the point of interest, because sometimes price will reach the higher low and sometimes price will reach the fair value gap to go up or go down, or, the order block. Now, again, is this fair value gap fully filled? No. This is the unfilled part of the fair value gap. There you go. Now, this is the high in a fair value gap. Again, this is a potential liquidity sweep level. And if you can see here, what happened? Sniper entry. Very nice entry. If you go to the lower time frame, you can actually catch a very nice entry. And now the unfilled part of the fair value gap is this one. And you see, after price coming into this level, it started going lower. And there you go. Huge profit going all the way to where? This external liquidity for another breakout structure. We have another breakout structure. We have a creation of what? Again, an inducement or a high in a fair value gap. And then we get another breakout structure. And we might be doing this now. It could be doing this. Price creating an inducement, taking it, and another breakout structure. Or a 3-drive pattern is going to be something like this. 1, 2, 3, and then coming lower. Breaking structure below, and the cycle goes on and on. Or it could be price going deep into this fair value gap and then coming lower. We don't know, but we always react. And if you can see here, after this liquidity sweep here of a high in a fair value gap, what do we see here? Below, we actually have this low, this low, this low, this low, this low, So simply a lower resistance liquidity levels here. And what happened after is a low resistance liquidity run. You see how when we have a low resistance liquidity, price immediately goes to the take profit. So this is how we do it. Now, if you go to the left, you're always gonna see those levels, those highs or lows in a fair value gap. Now, you see how why this one did not work? This one right here. Because we had a fair value gap here, but the fair value gap was fully filled, right? Price fully filled. This is not a high in a fair value gap. This is a high out of a fair value gap. Now, why are those levels are so important? Why is there, an immediate reaction most of the time from those levels? That's because institutions need this type of liquidity to either buy or sell, as you know, from the point of interest with a minimal slippage. That's why they look for those levels of liquidity inside of them to trigger them, sweep the liquidity and then buy or sell from there. That's how the institutions use those levels. And for example, if we go lower, let's look for any high or low in a fair value gap. This is also, even though it worked, this one kind of worked, but it's not the highest probability one. Why? Because the fair value gap here is already filled. But if we zoom in here, there is what? There is this level of liquidity, which is the high, and that's the first drive here, the first drive. There you go. We had this high. And then what happened here is the sweep. You see how the sweep is very, high probability, and it's a sniper entry. Price started going lower. We get some profit here. Price started going up. What is the next liquidity level that we're having? The second one. It's actually this one. And that's this is the first drive, second drive, and third drive coming lower, taking what? The external liquidity level here. And now we're going up. Now, the fair value gap is already fully filled. It's fully filled. So the last one, or when price takes that liquidity level, it's not going to be the highest probability one. And this is also a high probability liquidity level. This one did not work, and it's totally normal for some levels not to work. But we got to focus on ones that are fresh after a breakout structure. So the same way as we discussed the first two examples, what we're having is price immediately coming lower, breaking structures from here, right? And then creating fair value gap here and the inducement. And then we had another breakout structure. That's the one that we got to focus on. Try to, not use the old highs or lows in a fair value gap that happened, a while ago. Focus on the fresh ones more than the others. Now, if we just go to the left from here, what we can see here is the same. Price coming lower, right? Creating this low, and then price did not close above it. So this is not a valid pullback, but it's still kind of a valid low for me. What are we having here is this fair value gap, right? And we had this low. Now, I really wanted to focus more on highs or lows in kill zones also. So make sure that you are in a kill zone. What we see here is this. Price created this low, right? And then it did not take this low until 1, 2, 3 candles. When it's taken, what do we have? A high probability liquidity sweeps. Now, what is this again? This is now a low in a fair value gap. Again, what happened when taken? High probability liquidity sweeps. It happens over and over. Again, if you go to the left, what are we having here is, there you go. There is this big fair value gap, right? And price came to this fair value gap the first time here, almost at the 50% or slightly, maybe below it, right? But still, I'd be, there is a lower time frame confirmation here. I'd be taking it. What are we having here? This low in a fair value gap. Price taking this sniper entry again. Price did not take the external liquidity, which is this one. This is the first drive here. The second drive is this one, right? And this is now also a low in a fair value gap. Taken, going up, coming again. This is also a low in a fair value gap, as I said. Sweeping sniper entry going into where? The low resistance liquidity and the external liquidity. And again, the same thing here. What are we having is this fair value gap and also a very small fair value gap here. So this could be one singular fair value gap on the higher time frame. What are we having here is the first touch into the fair value gap, right? There you go. Second touch into the fair value gap, fully filling the fair value gap, and the real one starts here and taking the external liquidity into the other low in a fair value gap. And you see how the cycle goes on and on. And if you catch this one, targeting this external liquidity, that's going to be a huge trade, a huge trade. That's how sometimes we look for the, internal to external, external to internal, and lower time frame entries with an order flow with the higher time frame targets. So that's how we can get high reward to risk. Sometimes looking for this entry here on the lower time frame, targeting what? After the 3-dot pattern, we have internal to external. So targeting this high, this external high, and that's how you get high reward to risk, and you can pass your funded accounts only when you're able to get, many funded accounts, because sometimes you don't want to risk everything in one trade. But you can actually pass a funded account in one singular trade using this method, right? And you see how it happens a lot, especially make sure that you pay attention to the 3-drive pattern. You see price coming into a fair value gap. We have the first one, second touch, and third touch. The third one, that's where the real move starts. After 3 sweeps, 1, 2, the first one is here, 1, 2, 3. That's something that is happening over and over, especially with this specific model. This is all you need to really have those high probability trades, high probability liquidity sweeps. You see it happens here. First one, second one here. For example, this is one trade that I call myself. This one. This is the low in a fair value gap. Very nice snapper entry going up all the way to where? To this high in a fair value gap. And again, here, what happened? High in a fair value gap. That's where the real sweep happened. That's where the real sweep happened. Very nice. Now, looking at this fair value gap and looking at for those, liquidity levels for your lower time frame entry, I do not want to discuss this, in this video. I wanted another video, but I'll just be giving you the tip of the iceberg here. So liquidity level taken, you could actually look for the 2022 mentorship model, or you could look just for the change in state of delivery. So, for example, on the 15 minutes here, where did we have the change in state of delivery? Or actually, in this case, let's say the 2022 mentorship model, we have the sweep, no change of character, another sweep, and then change of character, and we have this fair value gap here. So it could be actually entering from this fair value gap, targeting what? Any type of liquidity or the external high, and we have a stop loss below. And you see this one was very clean one. If you look at the, if you look for the change in state of delivery, we only have one here. So you see this candle here, okay, it's a good candle, bullish candle. This one was very weak. What happened after is sweep again, bullish candle, and another bullish candle. You can actually enter from somewhere in here. Now, again, looking at this level, now this is a low in a fair value gap again. If we go to the right, what we see here is price coming lower with bearish candles, and only at this candle we have the change in state of delivery. You can actually see that 3 candles were engulfed with one body candle, right? And this one could be a future order block. That's the change in state of delivery. Or you could be looking for what? A change of character here, but no fair value gap in this case. Maybe on the low time frame there is one, but you could be using the order block, this order block right here that was created. And let's see if we have another sweep. Actually, no other sweeps. Yeah, because we have the first one, second one, and third one. And then price simply started going up, and you could be targeting what? As I said, the external. And you see, if you just enter, somehow from here, for example, when the change of state delivery happened, and then you could be putting your stop loss below the low and give it some room for price to breathe. So not exactly at the low, right? Somewhere in here. And for the take profit, if we just go back to the 4-hour here, I want to show you how, with the understanding of the drawn liquidity, external to internal and internal to external, you'd be actually making a lot of money. You see how this would be your trade, 7-1, huge one. If you enter this trade on a funded account with 1% risk, you're going to be making 7%, and you only need about, I would say, 5% to pass your account. That's it. So 2 trades of this type, you're basically passing your funded account. This is all with the understanding of external to internal, internal to internal, fair value gaps to external liquidity levels, and external to fair value gaps. That's the move. That's the move of the market. Keep doing this. Keep learning, keep practicing, and you guys got this, okay? This is today's video. Very simple, but very, very important. And a lot of secrets that people don't tell you about, it's right here. I give it to you for free. Make sure to share this video with your friends. Hopefully you guys like this type of video, and join the Discord as I do some live seminars there. Do not miss it out. This is Molham, and I'll see you next video.